Welcome back, guys. It's a good evening, and welcome back to my daily content on YouTube like this, our daily market review. And I don't know if I have to say sorry for yeah, like this weekend I am supposed to give you guys a very brief discussion about what we have to look at, but I wasn't that feeling fine, so and I didn't even provide the analysis at the right time because I'm supposed to like give you guys on Saturday. Then on Sunday you can go and study for yourself. Oh God, this network is bad. So you can go and study for yourself. Identify what you're looking at and what is your view. You know, have your own personal analysis as well. Do your own personal work because with all that you're going to be able to have a very broader view on the market. So I'm very sorry about that. And from next week or from every weekend, I will try as much as I can to give the analysis, to give my views on Saturday, so that going in on Sunday, you can work for yourself, go to your chart. I encourage my viewers to go to their charts and look at these things play out. And on the community as well, on my Telegram community, I also encourage them that go and tape read. And tape reading is not something that is very hard. It's just for you to go back to just go back to past price action. Start calling all those PDRAs and see how market react to them when price get there. Call just you give yourself some tasks, work on all that. I'm not supposed to use this section to teach, but I would just like to encourage my viewers to do this themselves because I'm not trying to make you a dependent human just so every time you waiting for me to do this before you can go and trade. Okay, but and again, this is for educational content. Okay, I'm not telling you to go and invest, to go and put money in anywhere, just giving you what I view, what is my own view on the market daily like this. So what you are looking at right now is the $US contract, daily contract for Monday, January 2022, which is the beginning of the week. And as we can see, before we go on the lower prices, as we can see, market did take out this buy side liquidity, and since the buy side liquidity is swept, we deliver lower, leaving inefficiencies and inefficiency behind. And one of the things I've come to realize over time is that whenever there is a big inefficiencies, whenever the market is moving and leaving inefficiencies on tap, that indicate a strong move towards a particular direction, just like what is happening here. The market has to do all this so that we can deliver very higher. Also the same thing. And now since all this has been in play, you need to also work with that. And looking at that same thing happen here and that same thing happen here, and now we are in another ranges. This is this is actually um if you know this particular cell model and market maker sell model, this is a perfect one that is delivering. And I'm going to talk about them when market gets to this point. When we finally go below here, I'm going to create a day to teach you about the market maker sell model and market maker buy model. So right now on Monday traded and take out, we traded higher early in the early opening of this price and take out this buy side liquidity, which is the Thursday high, and price into this fair value gaps because we can call this candle and this candle as a fair value gap, and we tap into it, and now we deliver lower. Now this delivery lower into Monday, but we didn't take the Friday candle low. So that makes it a very, very great area as well to look out for. So I have a statement here. just like I do daily. The Euro US dollar daily contract for Monday 2022 January delivered as call out in previous day projection, that is this weekend projection. Now on the weekly chart, the price delivery for today has formed a balanced price action within the up upper previous week low, and that that indicate a strong willingness for euro to continue lower price delivery. What I'm talking about is, let me go on a weekly time frame. Now if you look from this weekly time frame, you can see that this particular candle and this particular high is a balance. The high of today and the low of previous upper week, which is this particular week, is a balanced price range, and that is a signal to tell us that there is no reason for markets to go higher anymore, and we can continue to see price deliver, and this is our long time view in price. That is if we are coming here, and right now we are actually in a consolidation zone, so you should not expect such a very big impulse move in the market. And the euro US dollar daily, the euro US dollar daily price deliver higher and take out the Thursday high buy sell liquidity like I've just indicated. Now casting forward, we can have the sell side form on Wednesday 17, which is the sell side January up close candle low as the draw on liquidity. That is this, and this up close candle, we can use it as our draw on liquidity casting forward. Now the euro US dollar current bias is bearish, so for the week, so we can call today price action as the high of the week if we don't price above today high, since today price take out the swing low, a swing high, sorry. Now since today price has taken out this swing high, so we can refer to as this price as what, a balanced price, and there is no reason for market to come back here, and we can call out this Monday as the high of the week. So let's check on dollar index and see the correlation they have in price. So relatively with the dollar index, we can see that we actually take this um Thursday high, the low. Now we are referring to the low, we actually take this Thursday low. So this Wednesday buy side is what we are looking at on the daily, then weekly we are looking at this, and looking at market moving upward and gapping like this is a very great indicator that shows there is no willingness for price to come into this area. And we also have bullish order block here if we eventually price lower. And from now, I don't, my bias is bullish, and I am kind of bullish and neutral. I'm neutrally bullish. That is, I am neutral and bullish in bias. So I am not holding the bullish bias so strongly that I neglect the bearish bias. So let's go to the euro US dollar 4 hourly contract. So this is the euro US dollar 4 hourly contract, and as we can see, there there is a very strong willingness in lower prices for euro. So there is no really that willingness to for euro to price higher on the 4 hourly contract as well, and actually on the daily as well. So going in, you need to just be looking for lower prices. I don't know, but that is what I'm looking at, and it depends for you as well. So let me read the daily statement here. The euro US dollar hourly contract shows nicely the price delivery in today's trading ranges. And on the 4 hourly contract, we can see euro begin pricing higher at the opening price and taking out the Thursday and Sunday weekly opening price high. Meaning that at the opening price, we can see today price on the 4 hour taking out the Thursday high and the Sunday. This particular candle, 4 hourly candle, is formed on Sunday, which is an indecisive, and it did take out the Thursday, but we retake the buy side, which makes it a very great indication. Now we are willing to go lower. Now casting forward, we can project to expect euro to price into the 4 hourly bearish order block if market permit, or if there is any news event that is going to allow for that. And price should not go higher above the recent 4 hour swing high, meaning that if there is a willingness in price to come into this bearish scenario, this actually is not really that very big indication for a bearish order block. But we have this particular green candle here, and due to the it large entity or the way it delivers, we can actually call this. There are many things I'm looking at, I don't know, but sometimes I tend not to. Sorry guys, I have cough. So we you can see this particular candle, this 4 hourly candle, the wick. We can also look at the consequent encroachment of that wick, and we can use that as a PDRA to support price. I actually have that on my chart, and I don't want to, apply it. So that is it. We can use the sorry We can also look at this swing low to be taken, but this recent swing high, I don't back the idea of market taking this high again. You can see the momentum in lower price delivery. We didn't even form any higher price at this, like any week at this candle. It just begins to give us lower prices. So that being said, we should go to the dollar index. Now, this is the dollar index 4 hourly contract, and it is perfectly seen here. Let me get all this off my charts. Okay, I'm still by neutral, just like I said. Looking at the dollar index, there is by neutrality in the price. That is, if there is any intervention, we can expect dollar index to come into this 4 hourly fair value gap or BC. Then looking at the 4 hour, we have this particular candle here, just like as it is on the euro, and we can look for markets to price into this range before giving us higher prices. But overall, we expect, and looking at this particular area, this is an inversion fair value gap. This particular little line that looks at so close to each other is is an inversion fair value gap. I don't wanted to use this box to indicate it because this will give me a perfect indication. So there may be a probability where price will wick into it if market allows before going higher. But one of the things I would like to tell you is that you need to, you know, you need to be very careful if you are trading right now, because the price delivery for currencies is not favorable. Overall, the price delivery for currency is not favorable. So you need to go in and trade you need to be very, very cautious about what you're doing. So that being said, let's go to the hourly contract for the euro dollar. So this is the hourly contract for the euro dollar for January 2022. Then we have this statement here. The euro US dollar hourly or 60-minute contract shows nicely the intraday market delivery from Monday 22 January 2024. Now, on the hourly contract, we can see Euro swept the buy side liquidity and begin the sell program for the day. Now, meaning that we see on the hourly, we can see how perfectly we swept this Sunday candle high. Just a little bit, we swept it above, and we begin to deliver the sell program for today. Okay, so the daily profile is an obvious 1 o'clock a.m., which is this candle that swept the buy side liquidity. It's an obvious 1 o'clock a.m. candle, 1 o'clock New York local time up close candle as the high of the day that swept the buy side liquidity and begin pricing lower. Now, the low of the day is at 8 o'clock a.m. New York local time candle that swept the short time 60-minute low, which is this particular candle that swept this low. If we go on 60 minutes, you can see that we swept this low just a tick below that low. Okay, we swept the low before we price into the daily range. Let me get that off my chart. Now we can see casting forward on the hourly, we can look for euro to deliver lower into the equal lows below, meaning this relative equal low, which is sell side. So that is where we are targeting. And now there's something I want to add to this particular scenario. If you look at the range, let me use this particular canvas. Sorry. Now, if you are to mark this as a range, this low created this high, and this high created this low, but we didn't take out this low. Now we take out the buy side liquidity. Where is next for us to take? The sell side, and that is one of the major reasons why I favor sell side on the lower time frame. But although if not that it is clearly seen like this on a lower time frame, I wouldn't be that strongly, I wouldn't have that strong willingness to expect market to come lower. So the way market tends to deliver, it tends to acquire, it tends to deliver looking for liquidity areas to take. And when you take buy side, we should be expecting sell side. If we take sell side, we should be expecting buy side. But there are instances where we take sell side and we continue pricing higher. That is where when the market is looking for higher time frame buy side. And if we take short time sell side and we continue going lower, that indicates when the market is looking for higher time frame sell side. Just like what we are expecting, we are not only wanting the market to take this particular sell side, but we are expecting it to take that higher time frame sell side, which is this particular sell side here. So if that is our target, then they like our weekly target, then we don't expect because we take this sell side, the market should come back and take this buy side again. So since if we take this sell side, we should just continue create a new range that will deliver us into until we get to that weekly buy side, or we can just see an impulsive move in price. So that is just it for explaining. I'm just trying to use that to explain a very important concept. So let's go to the dollar index. So this is the dollar index, and we can also see same thing happening. But if the dollar open, I still favor dollar to come inside this area before going higher, like inside this particular area. And well, there's no actually a breaker here. There's no breaker on the hourly contract, and you can see we take out this sell side, we should go for buy side. Same thing that I was explaining on euro. We have buy side here, sell side here. We didn't take the buy side, we went down to take the sell side, then we should go for the buy side. Very, 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 very interesting points to look out for. So be very conscious going in. Be very cautious going in this week, and don't don't put more than you can afford to risk in this market. So thank you, good night, and I hope you enjoy these videos. Please, if you do enjoy, copy the link, share it to your status. I don't first share them for your status. Make people follow like my page. I beg. You dey enjoy the content, but you don't want to make people enjoy too. Well, sorry, just help me, broadcast. Let me reach out to more individuals, more investors, more like-minded individuals, like we say. So thank you again, once again, and have a good night or good morning whenever you're watching these videos. Thank you.